Hey traders, let me quickly show you how to identify that a support will turn resistance in the market. Please, if you are new to this channel and you are yet to subscribe, kindly hit that subscribe button, share this video, like this video so that others can benefit. And kindly know that our videos are mainly for educational purpose, not a financial advice. So let's move on. So what exactly is this support and demand? Support usually occurs where a downtrend is expected to pause, right, due to concentration of demand. If the demand is high, the downtrend will pause. Once the market gets to the support area, what are you expecting? The buyers will come into this market and take it up. That is where we call it a support. And once this buyer come into the market, it will take it up to the resistance area. So what you do is to mark out your support area and your resistance area, and there are strategies to trade this. So what is a resistance? A resistance occurs where an uptrend is expected to pause temporarily due to a concentration of supply. It is the level where sellers become active and prevent prices from rising further. So the sellers will come into this resistance side and prevent the market to continue rising further. Rather, it will now make the market from an uptrend to downtrend to come back to the support area. So this is what support and resistance is. So now how do we now know that okay, a support wants to turn into a resistance area? How would you now know this? How do you easily identify that? Because some traders usually will be trading this support and resistance zone, especially when it is just ranging within some areas where you mark it out. So, and without knowing, the market might now want to turn into a support, might want to turn into resistance, or a resistance might want to turn into support without knowing, and before you know it, this will hold you in the market, and maybe all the money you already make might end up losing. So if you are familiar with how, when you see that a market wants to change from support to resistance, this will save you a lot. So let me show you the things to check out, to look out for if a market is about to change from a support area to a resistance area. Basically, the number one rule you will look out for if you want to know whether a support will become a resistance is a breakout. Yes, a breakout. So let's extend this to the right side and see if we can get a breakout around this. Okay, there's another support here, right? There's another support here, and yes, we can see a breakout here. But one thing I want to tell you is that if you are trading the support and resistance strategy, simply because everybody say, or maybe the tutors or your mentor asks you to trade support and resistance, immediately you see a breakout. Please don't do that. If you see a breakout, there are some confluences to check before you take that trade. This will save you a lot. Some instance, for example, now you can see we see a breakout. Okay, normally they'll say you wait for a retest, right? You wait for a retest before you enter the market. Once you have a retest, you still do not have to enter that market, except if there is no breakout of this retest. And if there's a breakout of this retest just like this, you wait for it to come back down and retest again without a breakout. That is when you will enter the market when you see an engulfing candle. Please, when you see an engulfing candle or pullback candle, series of red candles, meaning the sellers are really strong right away and they want to continue going down. Please, because if you do the mistake of just entering a market because you see these breakouts around this side, it might end up trapping you, and this market might end up going up and continue going up, and this might trap you. And again, some mentors will say immediately you see that your market is going down just like this, you should know that this market wants to continue going down. No, please do not use that strategy also. If you really want to trade the support and resistance, if they tell you that yes, because the market is forming a lower high and lower low, then that means this market wants to continue going down. No, please do not do that. If you want to trade the support and resistance strategy, you have to wait for the breakout and retest, and the retest shouldn't go beyond your support area. Please, you shouldn't go beyond your support area. You wait that yes, this market really, you can see that this particular one went beyond the support area. You see, this particular trade went beyond the support area. So you see, assuming you entered right around the side, this you would have been trapped in this market. So let's see how this market go. To me, this market might go up. You see, this market went just up. As I said, this market went up. So if you want to trade the support and resistance strategy, please always make sure that after the breakout, the retest shouldn't go beyond the support area. Just like in this case, the retest shouldn't go beyond the support area. If anything should go beyond the support area, shouldn't be more than the wicks of the candles, right? Sometimes they do that to clear those who entered this trade right this side, and they have their stop loss around this side. You just want to clear people. So you wait for this market to come for a retest just around the side. Then if you see an engulfing sell candle, that is when you will enter this market. So let's look for a good example on this support turn resistance strategy, by the way. So this is a typical example of the support and resistance here. If you want to do this strategy, now you can see how these markets keep resisting around these areas. You can see how these markets keep resisting around these areas. Let me mark it out. Yes. Okay, you can see how this market keep resisting around this area. You can see how it keep reacting and resisting. It keep rejecting it around this area. And here is our support area. The market also reacted to this side. So if you are trading a strategy where you enter a sell to this side and get out, then you enter a buy to this side and get out, enter a sell to this side, you get out, you enter a buy, this might not go there, came back to a sell, went to a buy here, then came back to this side, right? So immediately you start seeing that okay, this market is supposed to go up to this place, but this market didn't go up, right? This market formed this big engulfing candlestick. You can see this red engulfing candlestick. This tells us that this has broken this our support level. You get? So we're actually waiting for this to happen before we take any action. So after this, we observe this break of our support area. We are not entering this market immediately, right? We are not entering this market immediately. We would wait for a retest. You get? You wait for a retest to this zone. You see what happened? It came to this zone and retested it, then came back, then went. We are not entering because we did not see a big engulfing red candle again after the retest. Please take note of this, because you can see this big red and green candle, which might even scare me off. This will give me more confidence to hold on, not to rush into the market, right? So, but after series of rejection around this zone, after series of rejection around this support zone, we see this big red engulfing candlestick. So this gives me a guarantee that I can enter for a sell. The seller are fully in this market right away. So I will take a short after the close of this candlestick. Please, you wait for the close of this candlestick, not entering the market because you see a big engulfing candlestick. No, because if you enter a market just because you see a big engulfing candlestick, guess what? If the candlestick has not yet closed, it might pull back and now become a pullback candle, meaning the buyers are right there and the buyers have pulled back this candle to now a buy market. So anything can happen there. So you wait for this candlestick to close, please. After this candlestick close, you will enter for a short just right there. And where will your stop loss be? Your stop loss will be just slightly above your support zone. Your stop loss will be slightly above your support zone, and your TP, you can just double your stop loss, or you can leave it open and keep shifting your TP to the area, or you target the next support area, the next area that the market reacted. And if you check where does this market reacted previously, if you check your left side is this side around this zone, right? So around the zone, if you mark it, because the market might even decide to bounce back again from this zone. So this will be your TP1. This zone will be your TP1. So, but if this market decide to break this support again, this support will now become our resistance zone. So you will use same strategy you use here. You wait for another retest, which happened around this side. You can see, you wait for another retest. In this case, you will see this big engulfing candlestick, which shows us that this market is definitely going down. So if you want to target a TP, worst case scenario, you should target 2 times this engulfing candlestick. I hope you are getting me. 2 times this red candlestick. The market must go 2 times this red candlestick, or rather you target the next zone. That is how to trade this strategy, please. It's as simple as this. Either you target 2 times this engulfing candlestick, you use your ruler to measure it, the amount it gives you, you will times it by 2. That would be your TP, your next take profit. Or you look for another support area where the market previously reacted also, and put that as your TP, and not forgetting to always shift your stop loss, please. So you see, here was our resistance before. Here was our resistance before, right? This particular area was our resistance before. Here was our support area. Here was our support area before the market broke to our support area, and this our support area would now refer to as our resistance area, right? This will now be our resistance area, because we don't know how the market will react next. The market might now start reacting to our resistance area the way it was reacting before on this place, right? So if this market now comes to this side, we'll now have a new support area. We'll now consider this as our new support area, and this side would now become our resistance zone. I hope you get this clear. So note that a support and resistance doesn't happen only around this face like this. It also happens in a trend market, either in a buy or in a sell market. So let me show you in the trending market how it looks like. That you can use your trend line. Your trend line would guide you on this one. So let me show you how it looks like on that. So let's use this one as our example, using our trend line. You can see our trend line on the upside and on the downside, and if you notice, this market is forming higher highs. You can see higher highs and higher lows, right, in an uptrend, meaning the market is in an uptrend. So, and here is our resistance zone. Here is our resistance, right, and here was serving as our support, right? So how would you now do if you see this and you want here to become our next resistance? So we say that this market broke out through our trend line, right? The market broke out through our trend line. So it's either we wait for an engulfing candlestick to form, or a retest before we enter a sell position. I hope you get this. Either we wait for after this breakout that we can see now, it's either we wait for a retest, it will go back to retest the market before we enter. That is before we enter after seeing an engulfing candlestick, or if there is no retest, we just see an engulfing candlestick, just like this big red candlestick now. So you will enter the market and target only the measurement of this red candlestick into 2. I hope you get it. You will target the measurement of this red candlestick into 2. So let's see how this market will play. Okay, now we have an engulfing candlestick. This particular one came out up. You understand? Instead of small candlestick to come then go back for a retest, rather we have this big large engulfing candlestick. So what we'll do is to pull out our ruler and measure the size of this engulfing candlestick. Okay, we got 118.4, right? 118.4 times 2 would be our TP. So let's get our calculator. 118.4 times multiplied by 2. So this would be our TP. Sorry, let's go to our chart now and measure 236.8, right? So we'll start from the length of the candle. We'll now measure, this time around we are measuring 236, right? Yes, 236.8 exactly. So this would be our next TP. Let's mark it out just in case. This would be our next TP. So if we're entering this market, just target only this place. Just target only this place. If you want to use this strategy, this would be your next TP, and this you can use on any time frame. Please, you can use this strategy on any time frame. So let's play and see if this would go to our TP. So as you can see, this market actually came to our TP. This market actually came to our TP. So now you know you can apply this strategy when you see a breakout. Either you wait for a retest, or you use an engulfing candlestick to measure the length of the engulfing candlestick alone as your TP, in case the market wants to reverse. But definitely, if you have a very big engulfing candlestick like this, the market will definitely go for the market will definitely go to the length of this engulfing candlestick. Please, if If there is something you don't understand in the whole video, kindly let me know and drop comments. Drop a comment on the comment section to ask me whatever question or whatever you don't understand on this video. And don't forget to like the video, share the video, and if you are yet to subscribe to this channel, hit the subscribe button, as we are here to always support you. If you hit the subscribe button, you will keep getting and turn on your notification also, so that you can get any new video we drop on this channel. We'll see you in our next video. Peace out.